I was day trading, but I was completely broke, trying to figure out where is my mistakes as a trader. And until I realized that I was making these 5 silly mistakes as a day trader. Once I have eliminated those mistakes from my trading, and overnight my trading changes from a broke day trader to a consistently profitable trader. And I have never shared those mistakes with anyone, and today I decided to share with you because you either can learn from your mistakes or you can learn from the mistakes of others. So I'm going to show you what are those mistakes that I was consistently making that always keeping me in the losing cycle. So make sure guys you take notes to understand what are those mistakes that I have eliminated to change my day trading from a broke to a consistently profitable day trader. So before I begin this very important lesson for you, make sure guys and girls you give a thumbs up, and also don't forget to subscribe to the channel. Before I begin, make sure you also hit that bell notification so that you are not missing any of the content that I am posting every single day. So with that said, let's begin. Okay, today. So the number one mistakes that I was making as a day trader is to trade on a low volume, trading in a market that is in a sideway. It is very important that as a trader we need to find out the right moment to day trade, because the market moves only 30% of the time. 70% of the time the market moves in a sideway. So if you look at the market, when the market in a sideway, trading in that market is just losing game. Guys, it is the most important part that you need to look at, is to find the right timing when the market is in a momentum. So if I give you an example that you can see, this is GBP JPY 15-minute chart, very good time frame for day trading. Now if you look at here, what do you see? That this is a complete head and shoulder formation. Head, left shoulder and right shoulder. Now any one opening position in that zone will be either buying or selling, will be stopped out. Why? Because you can see this green candle. You can see this green candle open here, has gone up and then has broken below and then has gone up again, closed as a bull candle. So anyone buying from this level will be definitely the stop loss below this low will be stopped out, or if anyone selling from this level, stop loss above this high will be stopped out. So either you are going long or short. In this narrow range there is no escape but stopped out. Why? Because during that time period the market in a low volume, and the big boys or the market manipulators just manipulating the market to gather liquidity. Now how can you escape that trap from the market maker? Well, the only way that you can do is to know when the market is breaking out. Now to find that zone when the market is having volume, that I find is to look at the sessions. And now you can see, if you look at the chart, you will see that during this consolidation period is where there wasn't much volume in the market, and as soon as the London opened, the market started to break down, and this is a clean breakdown that we have seen during this market, and we have traded also in that area, as you know that. Now at what time this market drops from here? When this head and shoulder has completed, as soon as the London session opened, the market started to break down. So what does it mean? is that when London open, London close, NY open, NY close, as well as in between the London and NY session overlap is where most of the time there is a high volume. So during that time period, if we see that the market consolidating before this period, and as soon as those sessions started, the market suddenly breaks down or break out with a bigger momentum, that's where the best time to day trade. And this is the trade secret that you must know as a trader, is to trade in the right timing. Now, this head and shoulder is formed during the Tokyo session when the market was not in a volume, and I was waiting for the market to break down, as being patient is the key. When the market not giving you the trade, you can't force the market. You need to wait the market show its hand so that you can trade. And how do you know the market is showing the hand? By also giving proper breakout or breakdown. Now you can see after this drop, if I replay the chart, we can see that a clean breakdown from that head and shoulder with a liquidity candle formation. And as soon as this liquidity candle formed, you can see the market started to drop, and it's a massive drop within a short period of time. And you can see on the screen, this is where also we have opened the trade and we have secured 80 pip, just a matter of 10 minutes in the academy with all the members who are trading with us. Now, the second mistakes that I made all the time when I begin my trading is trading against the trend. I know that many retail trader in the beginning makes these mistakes. If you are making the same mistakes, then I'd recommend you to watch till the end of this video, where you will be learning exactly how to identify the trend and avoid trading against the trend. Let's see how to trade with the trend to avoid trading against the trend. Now you can see here, if we look at this market on GBP/JPY, this market after this breakdown completely showing a downtrending market structure. Now, how do you define a trending market? The best way to understand a market is in an uptrend or in a downtrend by understanding the market structure. So if you look at from here, you can see it's a clean breakdown, pullback, another strong breakdown, pullback, another strong breakdown, pullback. So every time we see the market is forming series of lower high and lower low, which is in a downtrending market. So once we can identify a downtrending market structure, then in this market, the only way that we will be looking at is to sell. Even if we have this lucrative price action, which is basically a bullish signal, I will not be tempted to buy the market, because this is where this is a liquidity candle, and many trader might think of buying, and some might make some profit here as well. But trading against the trend has no credit, even if you are making profit from it. Now you can see with this bounce, it has gone up for a little bit, but you can see later the market just has broken down for a spike. And if you want to take a bigger risk reward, you might not be able to do that. And as trading is probability, even if you are opening a trade against the trend, you might be able to secure one trade or two trades, but ultimately for long-term perspective, you may not be able to be successfully remain profitable if you are trading against the trend. Now, to avoid trading against the trend, the first step is to look at the market structure and then wait for the market to give you a proper pullback and then price action confirmation, so that you are opening the trade in the major direction of the trend, and that's why the trade that we have opened here, this liquidity candle trade, is exactly satisfying our rules of the strategy to trade in the direction of the trend. So as soon as you see the market structure, always the best idea is to trade with the trend, so that even if you make an error in your trading decision, if you are trading with the trend over the long term, you should be profitable. Now, the third day trading mistakes that I was making is trading without proper strategy that is not proven and back tested. And this is the mistakes that most day trader does, is not sticking to the rules of the strategies or not trading at all based on the strategy. Now, trading without a strategy is gambling, as you know very well. Now, why it is important to have a strategy when you are day trading? Because as you know, the trading requires a high level of discipline. When a trader sits in front of the chart, there is a lot of emotional responses coming that might tempt you to take a trade which is not there. And that is why it is so important as a trader to have a clear set of rules, and you know that when to enter. For example, if we look at our liquidity strategy, we can see that the trade that we have opened, just that you have seen, is showing us clearly that this is the liquidity candle, which is according to the rules. We can cross check using the tools and indicators to show us that okay, this is where the market has given the entry candle. We can prepare for an entry. So it is another biggest mistake that I was making when I was trading without a strategy, just to see that most of the time I was entering in the wrong place. So if this is something happening to you, definitely I would recommend you to learn a proven backtested strategy that will help you to find the right entry regardless of your emotional state. The fourth day trading mistakes that I was making is not trading in specific time frame. This is a very common mistake that I see mentoring hundreds of thousands of members in the academy, that most traders, especially in the beginning, started to trade in the higher time frame, 4 hour, and then being impatient, dropping down to the 1 hour, and then dropping down to the 15-minute, and sometimes dropping down to the 1 minute. Now, as a day trader, you must have a specific time frame that you want to trade. It can be either 15 minutes or 5 minutes or even 30 minutes or other time frame, because each time frame behave differently at different period. So if you are trading on 15 minutes, that I would recommend you to stick to the 15 minutes. You can look at the higher time frame such as the 1 hour, 4 hour for multi time frame analysis, but it is always a good idea is to stick to one specific time frame for entry. Okay, so the fifth and the worst mistakes that I was making as a day trader is not to do the risk management. I was not following along the trading plan, not following the proper risk reward. If we don't do the risk management as a retail trader, as a day trader, it's impossible to be profitable over the long term, because in each trade we need to define how much risk you will have and how much probability that you have that trade to win. And risk management include lot sizing, which is also very important part of trading plan. Is regardless of how many people stop loss you are putting, you need to find out the lot size based on your account size. I strongly believe that guys, you enjoyed this very important informative day trading video that will help you in your growth as a trader. If you find value in it, make sure that you give a thumbs up and also subscribe to the channel. Now, in addition to that, if you want to get access to the liquidity candle, the strategy that I am trading as well as the tools. Also, if you want to get access to the VIP channel where I am sharing all my trade, including all the strategies, as well as accessing the VIP chat group, including all my trading tool, you can find link below this video. So we had 80% off that is still available. In couple of hours it's ending, so you can use that coupon below this video, which will give you additional $300 off joining the lifetime access to Forex Trading Wizard Academy. Visit the website and then click find out more to get access to all the tools and strategies that we are offering, and also join the free Telegram channel link below this video for more educational content like this. With that said, thank you, and I'll see you soon again trading live.